Today, we're hearing from an expert on all things cryptocurrency, including Bitcoin, Ethereum, DeFi, and the Metaverse. This video will give you a great understanding of these topics that we're all talking about. Now, before we introduce our guests and dive more into these conversations with Grayscale, the quick reminder here that all investments, as well as strategies discussed in this video, are not recommendations and are for informational purposes only. Investing in cryptocurrency carries a significant risk. All right, so today we're joined by Craig Salm, head of legal at Grayscale Investments, to kind of chat with us about all things crypto, DeFi, anything that goes into kind of where we're headed with the future of cryptocurrency. Craig, thanks so much for joining us today.
Thank you for having me.
There's a lot of people out there that really don't understand crypto. So if we were to take a step back and you were to meet someone for the first time and they would ask you, like, explain to me even like what cryptocurrency is in your terms, how would you explain that?
I like to explain Bitcoin by first explaining something like email, because all Bitcoin and other cryptocurrencies do is provide services that we've come to know in a disintermediated way without any intermediaries. So take something like email. It allows Craig to send a message to Tony through solely a protocol. The name of that protocol is Simple Mail Transfer Protocol, or SMTP. That might be an acronym you may have seen just through emailing over the years. But the point is that it's just a single protocol. So I can send an email from, let's say, Gmail to Tony, let's say at Outlook, and the message just gets from me to you instantaneously. It's super easy. So that's the way mail and email works.
Okay.
Before Bitcoin, if I want to send money to you, Tony, let's say I have Chase and you have Bank of America. Well, you may recall that wasn't possible to send money between those banks before things like PayPal and Venmo existed, because banks are not truly digital the way that email is. And so even with services like PayPal and Venmo, if I want to send money to you, Tony, before Bitcoin, I would send a message to Venmo, let's say. Venmo would then talk to, let's say, your bank, Bank of America, which would then talk to Venmo, which would then complete that whole transaction. But in between all of that, there's banks, there's people, there's all these different processes taking place. With Bitcoin, it disintermediates all of the banking processes and allows money to be like email, and that I can just send one Bitcoin over to Tony, and all that does that is the Bitcoin protocol. So that's really the true innovation of what Bitcoin and other cryptocurrencies offer.
How would you describe the difference between Bitcoin and Ethereum, which I think many of our viewers and the average investor out there hears the most about beyond Bitcoin?
Yeah, so what I just described was a Bitcoin transaction. It's super simple in that it allows Craig to transfer Bitcoin to Tony, Tony to transfer Bitcoin back to Craig. So it's really just sending, receiving, and storing value. That's what Bitcoin does. It's why a lot of folks compare it to a digital gold of sorts. It just allows you to store and send value. But as you can imagine, after Bitcoin, a lot of smart engineers and developers were thinking, well, what other types of more complex types of transactions we can do? Because in the financial world, people aren't just sending value from A to B, they want to do more types of complicated things. So for instance, if you have a company that wants to pay salaries to their employees at the beginning and the middle of every single month, well, Bitcoin doesn't allow you to do that type of complexity, but something like Ethereum actually does. So you can say, this company is going to transfer Ethereum on the Ethereum blockchain to their employees at this set time of every month. And you can do that with Ethereum. And the actual technology that allows you to do that is something called a smart contract. And it's smart in the sense that it allows you just to do more types of conditionals and various things that you just can't do on Bitcoin. So Ethereum is essentially a natural extension from Bitcoin because it layers on that new type of use case.
The same way you described cryptocurrency to the average person that you meet on the street, how would you describe DeFi and then eventually as well the Metaverse that's out there as well?
To me, DeFi is the natural extension of Ethereum, which was the natural extension of Bitcoin. So Bitcoin, holding, sending, and receiving value, it's a super simple use case, but a very important one that did not exist before Bitcoin. Ethereum, using smart contracts, allows you to do more complex types of transactions on a blockchain that Bitcoin doesn't allow for. With DeFi, you're layering on traditional financial services on top of Ethereum. So that's things like an exchange. In today's world, if you want to exchange assets, you have to go to a national securities exchange like New York Stock Exchange If you wanted to exchange commodity futures, you have to go to a commodities futures exchange like the Chicago Mercantile Exchange. With the DeFi protocols that offer, it's called decentralized exchange or DEX services, you can just swap assets peer-to-peer with no intermediary. There's no people, there's no exchange. It's just taking place on these DEX protocols. So that's exchanging. You also have lending and borrowing protocols. And so today, if you want to lend out your assets because you're just sitting on them and want to earn yield, you have to go to a bank where they're taking custody of your assets and then finding a counterparty to lend them out to. They're giving you a certain interest rate. There's counterparty risk, there's custodial risk. But with these lending and borrowing DeFi protocols, again, all you have is a protocol that you're depositing your assets with, and it's automatically lending them out for a certain interest rate and then paying you back that. Super simple. We have one called Uniswap, which is the largest decentralized exchange. So you can just go to a website that offers the interface to the Uniswap protocol. And if you want to exchange, let's say, your Ethereum for another asset on the Ethereum protocol, like USDC, which is just a dollar-backed stablecoin that exists on Ethereum, you just put in your Ethereum, it swaps with USDC, you get USDC back. It happens quite quickly, and there's no actual physical exchange with human beings in the middle. It's purely on the Uniswap protocol. So that's for a decentralized exchange. Lending and borrowing, an example that we have is a protocol called Compound, which again, you go to a website that offers the interface for the Compound protocol. You can deposit an asset that you want to lend out, and then it just sits there and you earn interest. Conversely, if you want to borrow an asset, again, you go to the website, you can borrow from the protocol and then just pay interest back to the protocol for that service. So that's lending and borrowing. A third type of financial service we have in DeFi are synthetic or derivative protocols. And so what these are doing are creating synthetic versions of real world assets within the cryptocurrency world. For example, if you want to invest in gold, there's tokens that exist that are called wrap gold, or another terminology, that allows you to get the exposure to gold, but without having to actually put your money into physical gold or a gold ETF. You can just do it on these protocols. And so examples are Synthetics and UMA. These are all protocols that the Grayscale DeFi fund offers exposure to, and just really a reflection of the innovative new use cases that we're seeing within the digital currency world. To sum it up, within DeFi, some of the main use cases we have are decentralized exchange or DEX services, and Uniswap is an example of a protocol that provides that. We have lending and borrowing with Compound as an example of a protocol that provides that type of service, and then synthetic or derivative assets, with Synthetics being an example of a protocol that offers those services. And the Grayscale Decentralized Finance or DeFi fund holds all of those assets, as well as several other ones that have those types of use cases.
Let's talk real quick about Meta. So everyone over the last few weeks have seen it. There's every time I scroll through my Instagram feed, I see something new about Meta, right? Whether it's a joke or real. To me, it just doesn't make sense. Like, I don't understand what it actually is and what the Metaverse really is. So I'd love to hear your explanation of that.
The Metaverse is really the place where human beings can become their digital self. Everything you do online is a sort of pseudo Metaverse. Going on Facebook, going on Twitter, going on Instagram, you have a digital persona, and in a way that is a metaverse. But the metaverse that we're really talking about today is where digital experiences can take place. And I think the reason why Facebook has made this very major decision to change their name and their focus to Meta is because they're really seeing where the world is going from a technological perspective. It started out with them investing in virtual reality or VR many years ago with the Oculus, but they're really starting to see where it's going today. And I think part of that has to do with what we're seeing in the digital currency world. Thinking about Bitcoin and Ethereum and DeFi in the ways that they're disintermediating and decentralizing financial services. Well, we could disintermediate a lot of things, not just financial services, but also things like entertainment and social interactions. And that's why what we're seeing at the Grayscale side is worlds like Decentraland, which is an example of one type of metaverse, but it's not a metaverse that exists where a company owns it, like a Facebook, but it's owned by all of the users. There's no intermediaries. And that to us is a very exciting use case, because it's truly a world where anybody can be themselves, go out, live their digital experience in an open format that they can own whatever they want of. So I think you're sort of seeing the combination of the digital self with the decentralized world that we started with cryptocurrencies. And that's why folks are really excited about it. If you think more about what Web3 is doing that Web2 did not do, with Web2, we had corporations, companies like Facebook and Amazon and Google and Twitter that own and have all the value accrued to them. With Web3, the value accrues back to the users. And so metaverses like Decentraland are really a reflection of that, in that they're these virtual worlds that companies don't own, but the users own. That's why a lot of folks in the cryptocurrency industry, and now we're even seeing that in the Web2 industry with Facebook changing their name to Meta, really appreciate. And that's also why Grayscale decided to launch our Grayscale Decentraland Trust earlier this year, because we really saw that that's where a lot of the industry was headed towards. And what that trust does is hold a token called Mana, which is the token that powers the Decentraland metaverse.
So the days of buying individual stocks and ETFs and building a portfolio around there, I feel like are in the past. If I'm watching this video, I'm thinking, I'm going to think about ways to diversify my portfolio outside of just the stocks and standard ETFs or even mutual funds that we grew up seeing. So this is super exciting for me personally, and this is exciting, I know, for all of our viewers. So thank you so much, Craig, for joining. This was super interesting. We hope to see you again soon.
Awesome. Yeah. Thank you so much for having me, Tony.